Today I have Todd Horwitz, Chief Strategist at BubbaTrading.com. Bubba, Trading.com. Todd, welcome to Futures with Lichtenstein and Hinks. New lows in the dollar.
Good morning.
What's weighing on the greenback here today, Todd?
Well, I think really with this is an artificial way to keep interest rates low. You know, we've seen the bond markets get hammered, right, over the last 3 or 4 weeks, and we're now trying to push rates up. You see the 10-year near 2.7, you see the 30 back to almost at 3%. So the only way that we can control interest rates is by pushing down the dollar, and I think that's more what you're seeing is a dramatic push down, weighing the dollar down. What is this, I think 3-year lows now here. So I think this is what you're seeing. This is part of this whole Fed magic of how they try to keep rates under control, and I think that you're starting to see this big boom in the markets. I mean, we're seeing stocks fly like crazy. I mean, it's like being in one flew over the cuckoo's nest right now with the way things are happening. And of course, this push down is helping keep rates lower. A stronger dollar is going to bring rates much higher than they are right now. And I think that's really what we're seeing here.
Todd, look, let's touch on interest rates for a second here. The normal range for rate hikes this year is between 2 and 4. A lot of people talking about 3. That seems like the obvious. But when are we starting to teeter towards 4? Is this GDP number Friday a big number? Start to lean us between 3 and 4 rate hikes?
It should be a big number, but Ben, seriously, we should already be planning on 3 or 4 or maybe 5. You know, if the economy is truly growing and the stock market is supposed to be an activity of what's going on in the economy, then rates should be higher. There is a demand for capital out there, but the banks are still not necessarily providing liquidity to the average investor, to the small guy. And that's where the real issue begins here. So we should have a lot of rate hikes. And of course, I think the Fed is still afraid to make the wrong decision, which they'll make anyways, because they've done it every time in history they've made the wrong decision. But I think rates should be going up. There should be no problem if we are truly growing and we're seeing this great amount of growth and great amount of momentum in the stock markets and all these raises and everything else going on, then why shouldn't rates be higher? Now the banks are signaling that they think rates are going higher faster as you watch all these bank stocks trade straight up. So in my opinion, it's going to be 4 to 5 and maybe more. I mean, that's really what we need to see, is to really get this economy back on track, is to free up liquidity for small new startup companies and for small businesses.
Todd, if I had known that rate question was going to get you so fired up, we would have had you on the show later on in the interest rate segment of the show. But let's shift attention on over to the euro currency, because we've got a lot of activity, a lot of focus here for our traders. The ECB tomorrow morning, what should we be looking for?
Well, I think Mario Draghi has shown that he's going to do whatever he thinks it takes. Now, what is it going to take now? I mean, with global markets rallying like crazy, what does he think he needs to do now? Hopefully, they'll finally try to step away. At least here, the Fed has kind of tried to step away, and we've seen kind of a natural move here. It's still been a little bit, manipulated out, but basically, we've seen rates rise, and we've seen the markets not be affected by it. Hopefully, Draghi will try the same thing and kind of walk away and say and get away from his statement is, I'll do whatever it takes. We watch what happened in Japan, where now the Japanese government owns 55% of the equity market there. So hopefully we can start to see these central bankers step away from the markets, let the true free markets come back into play, and then we can actually get a real read instead of having the currency wars, which we have right now, which every country's fighting to get a higher GDP number. So that's what I think we should see.
As the U.S. is shifting to a tighter monetary policy, what do you think the euro's going to do? He's got a lot of things coming up on his radar. He's got the Italian elections. He's got meetings. He's got Trump speaking on Friday. Is he going to make a headline? Mario Draghi, he likes to make headlines. Is he going to make one in this meeting?
They don't call him Superhero Mario for nothing. I think that we're going to see. I think that he's going to make the decision that's going to force the euro down. I think the euro's reached some unbelievable levels here. It's had a dramatic run from 115 all the way to about 124 right now as it trades. I think this is very near a spot where if you were in it, you'd be wanting to protect that profit. And if you're looking for a spot to take a short side, obviously you wouldn't sell into the straight up rally, but you would look for it to pause and turn the other way a little bit and then want to be a seller. I think he's going to give you an opportunity to sell it, and I think it's going to go lower off of his announcement tomorrow.
Hey, Todd, let's stick with the euro currency here and the eurozone in general. How much do you think things like Brexit talks, the unease in terms of Angela Merkel's feeling, recent events in Spain, how much are these uncertainties impacting price activity? I mean, without them, would the euro currency be much higher, or is it just at current levels because it's managed to shrug off most of this news?
Well, I think a lot of it ties back to the U.S. dollar, right? We have this big push down in the dollar. I think that those are all negatives for the euro currency, and truthfully, in 5 years, I don't think there'll be a euro currency. I think that we're going to go back down to those levels that we originally made back in the 80s. 88, 89 was where the euro actually was trading after it first came out. And I think that's where it's going to go. I think there's a lot of issues that are being unaccounted here for. But again, when you have the hidden hand of the ECB, you have the hidden hand of the Fed, and you have all these other central banks around the globe trying to figure out how to manipulate these currencies through the currency wars. I think it's eventually going to wash itself out, and I think what you're seeing now is just an artificial push higher. Now, again, I'm not getting in front of it, but that's what you're seeing is a straight up artificial run higher that is just kind of putting everybody in the same area, because again, basically the United States debt market is really becoming a much bigger problem here, and nobody wants to see the U.S. default, so they're trying to make everything possible so they can keep these rates lower.
All right, Todd, let's pivot now to Brexit and the British pound. We've got some numbers coming out this morning. We've got the British pound trading at 2018 highs, just a rip higher this week. Why the strength in the sterling?
Well, I think that everybody realizes that the Brexit is not that big of a deal either way. Now, the British pound actually has rallied almost straight up since the initial Brexit vote. If you go back and look at it, we went down, they tanked it, and we've basically gone straight up since then. And each and every level that it got to looked to be another buying opportunity. Now, we were looking at buying at 125, 130, 135. I think now we're pressing just through 140, and there's no reason that the British pound that has always traded on its own, it did not give up the British pound for the euro. I think that continues to remain strong and look for it to continue to rally, and I think it will eventually here continue to go higher when the euro starts to fall and go lower.
Yeah, it's already up 1.25% here today, adding to the gains from yesterday. That sterling here is definitely well bid here. Todd, that's all we have time here for today. That's Todd Horwitz of BubbaTrading.com. Thanks for joining us on Futures with Lichtenstein and Hinks today.